A couple of days ago, I got a couple of questions about silver from some of the members at myfinanceteacher.org. So I decided to go into a full silver report. And yes, I try to do my best to provide as much value as I can to the members at myfinanceteacher.org. So here's the February 2022 report, where we're going to have a look at some of the drivers for silver price going into the next several years, perhaps into 2025. And to summarize all of this report in one sentence, the long-term outlook for silver is very attractive. First, let's have a look at the stimulus package that the governments all around the world have introduced in response to the 2020 pandemic. We see that just over the next several months, from February to May 2020, the stimulus packages for some of the selected countries reached $11 billion. And that's again, just over the span of several months into May 2020. And one could imagine how much more money printing did actually take place, say in the second half of 2020, before more recently the Fed in the US has started talking about tapering. All of these stimulus packages, all of this money printing is of course likely to lead to a range of price appreciations, including higher prices in precious metals and particularly silver. If you compare this more recent stimulus package in the response to the global pandemic to, let's say, the previous emergency related to the global financial crisis of 2008-2009, you'll notice that the more recent pandemic response has been multiple times larger than the global stimulus package in response to the global financial crisis. And remember, as a response to this global stimulus package, just after the global financial crisis, silver price has shot up from around, say, $10 or so in 2009 to nearly $50 by 2011. And with the more recent stimulus over the last couple of years being multiple times larger, perhaps the response of the precious metals, perhaps silver response, is going to be that much more awesome. Of course, all of this stimulus, all of this money printing leads to inflation, and here's an inflation chart for you. The blue line is the headline inflation, and the red line is so-called core inflation, which doesn't include food and energy prices. Perhaps the red line is more interesting for those who don't have to eat, don't have to commute, don't have to travel, don't have to use an aircon or heating at home. In either case, whether you're looking at headline or core inflation, it's at historic highs over the last 30 years. And given the amount of stimulus, given the amount of money printing over the last couple of years, it's not that extraordinary for inflation to reach double digits of at least 10%. All of that, of course, is going to contribute to higher prices for a range of commodities, particularly precious metals and silver. But now focusing a little more on silver, let's have a look at silver demand, which of course consists of industrial demand, photography, jewelry, silverware, and silver investments. Let's look at some of the more interesting components of this demand for silver. Starting with industrial component, more specifically demand for silver from auto industry. This fascinating image shows how many components of a regular light vehicle, of a regular car, does actually use silver. All in all, in total, your regular car will use anywhere between 15 to 28 grams of silver. And that's for a regular car with an internal combustion engine. The amount of silver consumed in a hybrid would be higher, and even higher is the consumption of silver within all electric vehicles. So with the current composition of vehicles, current production of vehicles for 2021, the total demand for silver from auto manufacturers was somewhere around 61 million ounces. That's for 2021, and this demand for silver from auto manufacturers is expected to grow substantially over the next few years into 2025. Here we see that the composition of type of cars is going to change significantly into 2025, with a greater percentage of cars, with a greater number of cars being hybrid or fully electric battery cars.
And ICE here is an internal combustion engine.
So with this in mind, with the number of hybrid and electric cars growing from over 10 million in 2021 to over 30 million by 2025, demand for silver from auto manufacturers is expected to grow from 61 million in 2021 to 88 million ounces by 2025. And that's only one component of industrial demand. Another very large component of industrial demand for silver is all the electrical equipment and electronics. And as we see on this chart, the demand for silver from electrical and electronic applications was just under 230 million ounces in 2021. That's around 3.5 times that of the demand from auto manufacturers. And this demand is expected to grow to around 246 million ounces by 2025. That is a growth of around 7.5% into 2025. And all of this additional demand pressure is also painting an attractive outlook for silver prices. Next, let's have a look at photovoltaics component of silver demand. That's basically solar power. Although solar batteries do require a lot of silver, and as we see on this chart, the number of solar-powered installations is expected to grow substantially into 2024. It's expected to more than double from 2019, so that is a very substantial growth, much higher silver demand from photovoltaics over the next several years. For 2021, the demand from photovoltaics makes up around 10% of total silver demand. So that 10% more than doubling over the next several years is a very substantial pressure to move silver prices much higher. So with this understanding of where demand for silver is going, let's have a look at what are some possibilities for silver prices. Let's start with gold price with a bit of a speculation. It looks like gold price is showing us some sort of a cup and handle formation, that is a bullish formation in technical trading. And usually once you see a breakout from the handle, the technical target is based on the depth of this cup. Let's say the depth of this cup is somewhere around $850. So $850 higher from a breakout of say around 1820 gives us very close to 2,700 on gold price. Actually, in some of my videos, I've mentioned that with the unprecedented amount of money printing, it's likely that gold price will be far beyond $3,000 over the next few years. I recommend you have a look at that video. The link is down in the description and perhaps at the top of your screen right now. But coming back to gold and silver prices, if gold reaches at least $2,700 over the next few years, what might be the silver price? Well, let's have a look at a gold-silver ratio, which has been declining over the last couple of years, from above 110 down to the recent low around 65. We see a bit of a bounce up to the 50-month moving average. And it's likely this gold-silver ratio is going to decline further, perhaps to come back to some of the historical lows somewhere around 48. That's been the low around 2007 as well as 2012. So if we see the gold-silver ratio around 48 over the next few years, and if gold price reaches to at least $2,700, that implies a silver price of around $56 per ounce. And to be honest, this is more of a conservative scenario. It's actually more likely that silver will finally break this resistance line somewhere around $50. We've seen silver at $50 in early 80s. We've seen silver at $50 in 2011. And as they say, third time's the charm. Silver is likely to break above that zone. Perhaps $80 silver is not out of the question. Let's see what 2025 shows us. After all, the gains in silver are likely to be greater than gains in gold. Let's have a look at some history. Back in 1970s bull market, silver gains have been greater than the gains for gold. We see that silver gained nearly 2,500% in 1970s. And this chart is actually quite crude. If you look at the detailed chart, you'll see that these silver gains were closer to 3,000%. That's when gold gained only about 1,500% during the same bull market. During the bull market of 2000s, between the year 2001 and 2011, while gold price has gained somewhere around 600%, silver price has actually gained over 900%. And again, this chart is pretty crude. If you do look at the details, the gains for silver were actually closer to just a smidge over 1000%. So in both of those long-term bull markets, silver gains have actually outperformed gold gains quite substantially by around a factor of 2. So if gold is, let's say, likely to move up to the price of around $2,700 from the price of $1,000 back at the low in 2015, 2016, that represents around 170% gains. This chart is actually a little bit mistaken, showing around 270% gains for gold. But regardless, in that case, silver might be likely to do something around 300% gains. Again, in previous bull markets, silver gains outperformed gold gains by a factor of 2, giving us something around, say, 300% gains for silver price, which again would imply a silver price of around $56. So perhaps this is the time for me to ask you a question. Do you think silver is going to break out of that range around $50 during this upcoming third attempt? Are we going to see around 56 or closer to $80 silver price? Let me know what you think in the comments below. While we continue here, to mention the last important thing to notice is that the miners usually outperform the metal itself. Here I want to compare the silver miners versus silver price, but without a silver ETF going back into history for far enough, let's have a look at gold miners versus gold price. This is GDX versus gold price. We see that gold has actually made marginally higher high back in 2020, while GDX is still pretty far from its previous high around $60. And it's not like miners are in a worse shape right now. A lot of their free cash flow is much better than they had back in 2011. The leverage, the amount of debt that the miners have is generally much lower right now. And looking at costs, energy, for example, back in 2011-2012, oil price was around $100, whereas oil right now is somewhere around $80-85 per barrel. So I think it's likely that the miners are going to catch up and overtake the metal, both the gold miners and silver miners. So if you think that silver is going to do well over the next few years, wait till you see what those silver miners are going to do. And the crucial moment here is that there aren't many silver miners that actually produce mostly just silver. A lot of silver producers actually produce a mix of metals. And it's pretty hard to find a pure play for silver in relation to miners. So if you do choose a correct entity to invest over the next few years, mind you, without taking too much risk, your gains are still likely to be outstanding. And that's exactly the detail I'm going to share with the members at myfinancesteacher.org beyond the information presented in this report. So for more details and nearly daily updates on a range of markets, join us at myfinancesteacher.org. For now, happy Chinese New Year, have a nice day, bye bye.